Real estate investors, contractors, business owners, if you're looking for investment property, and many of you may know about the what's called the Burr method, but one of the keys, especially when there's not enough housing in most markets within the United States, the key is finding deals where you can be a lot more competitive than the next person. And one way to do that is use either a rehab loan or fix and flip loan product. And I wanted to go over this and some of the common questions that I get asked on how this process works. And so I'm going to share my screen here. So we can do our minimum loan amount is 75 grand. We can go up to 2 million. Actually, our FICO score right now is a minimum of 650. No impounds. What that means is that uh, there's no taxes, insurance is required to be part of the mortgage loan payment amount, meaning you don't have to come out with it. Um, I mean, obviously, we still require uh, tax insurance, but at least it don't have to be impounded. Um, the rates kind of depend on a lot of factors: the deal size, the where the property is located, your credit score, your experience. You know, that kind of determines the interest rate. But the what we do is just to give you an idea of how the process works. So, for example, let's just say you have a property that you're going to be purchasing, and that property, after you fix it up, is going to be worth, let's just say, $1 million. We'll just, for round numbers, we use $1 million. And you purchase that property for, let's just say, 50 cents on the dollar. So say like 500,000, right? And in order to get that property where it needs to be, and it's a minimum, uh, you know, to fix it up, let's just say it's more cosmetic and that kind of thing that you need to use to fix it up. And you're like maybe a brand new kitchen, maybe you have to replace the roof or put in a new HVAC unit, do some plumbing, do a new bath, but you're not necessarily like building on to the house, like putting a whole new um bedroom. I mean, you can knock down walls, I have somebody who's like knocking down a wall to add another kitchen because there's just only one one or bathroom in the house. Those kind of things that we can do. This is not necessary for a whole ground up construction project. What we'll do is we'll fund up to 75% of the after repair value of that house. So 75%. So if that property is going to be worth $1 million, we'll finance up to $750,000. So that 500,000 you use to purchase it, and we can finance up to 100% of the renovation costs. We only require that you put 20% down towards the purchase of that property. But that's how the numbers shake out. Typically, we can go as long as uh, 12 months plus another six months. Um, I'll just say it like this: most renovation projects are not going to be that long. If it's that long, maybe there's something wrong. But most of my investors are doing a deal um, where the property uh, is maybe a 3 to 6 months kind of turnaround. All right, and then so one of the common questions we also get is, well, can I use this to buy the property and then rent it out? So, well, yes, but it'll be two different loans, but this process is for renovations, purchasing and renovation. You can also use it to cash out and use the money to renovate the property. But it's a really good program uh, that's based on what the value of the property is going to be after it's fixed up, not necessarily solely about the value of the property. Because there's some hard money loans that give you renovation loans, but they're really it's really only a hard money loan where they're giving it based on the current value of the property, where we're giving you money based on what the 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 value of that property will be. All right, so the loan, so and then the only thing that we need for this deal is really only two things. Most important thing is this document called a schedule of improvement, and what that does is it's just breaking down what what we're renovating. And the great thing about this, it has a lot of details here in red of what uh, the answer to the question. And so here's the part you have to keep in mind, right? We're going to approve you based on this document and the repairs that you are doing. So, initially we're not going to visit the property with you. We're going to base the whole approval uh, approvals on this document, right? So you got to be detailed as possible. So if you're going to be, let's just say, uh, improving, replacing windows, well, how many windows? What kind of grade of windows are you going to be you doing, right? If you're going to be uh, hey, I'm going to be painting the house. Well, detail. Are you going to be painting the inside of the house? What, each each bathroom, each kitchen, each room rather. What exactly are you going to be doing? Okay. So and then the only other thing that we need to do is just this short 2-page application, which is this, the information on the property, and then that. And then we have detailed videos on how to fill those applications out. But for the purpose of this video, I just wanted to show you how easy it is. And here's a great thing. So let's just say you want to lock up a property, put it on the contract. But just like a prudent real estate investor, what you want to do is you want to get your contractor, you want to review it, you want to do it, but you also want to make sure you have your ducks in a row for financing. We'll send the deal once you have all the information. We'll send the deal to our appraisal department to look everything over, look at your schedule improvement, the application, and then pre-approve you on the deal based on that information, right? Before like an appraisal and that kind of stuff is ordered. So that going in that you have for sure you have financing for this particular opportunity. And then once you have that, now I tell everybody, you probably want to give 5 to 10 day, ideally 10-day due diligence period, so like to lock up the property. And then I'll give us plenty of time to do what we have to do to pre-approve the deal and so forth. Because we typically ask for like 72 hours to really dig into the deal, to process it, to tell you some of the things that we see, the good and the bad on the deal, to protect both of our interests, right? Because we want to make sure that you have enough money to facilitate the project. So now, how do you apply? How do you apply? So one of the things that you can do is you can go to this website, funds for investor investor.com, and with that website, you will have you'll be sent the application, and then of course call our office. So here's the website. So fundsforinvestor.com, and then put your information in there. And we will be happy to serve you, or obviously you can go to Wallace Capital Funding website as well. But thank you. If you have any questions, of course, just give us a call and we are ready to serve. Thank you. Thank you for watching.